Good evening. Thank you to organizers for this opportunity to participate in this event. I believe that it's quite of major importance because regulatory institution meets financial industry and discuss RegTech initiative. So I work in the supervisory area for already 15 years. I started from the insurance supervisory authority. Now we are working in the Bank of Lithuania and covering all the financial industry in Lithuania. So I skipped a lot of slides about me, agenda, etc. So I will briefly provide you information about current context about RegTech. Then I will share some insights about how we work and our approach towards RegTech, and also share the vision about where we could work together regarding future of compliance, digital compliance, I would say. So there's a slide borrowed from the UN Stinis report, actually, and the main idea that global economy and local economy is quite dramatically changed. Shifting to digital platform-based economy, gig sharing, big data, etc., shapes how we deal. Just recently, we had experience like calling for taxi, waiting if you are lucky for a half an hour, and those awkward moments regarding the change from the bill. But now, just tap on the phone or on iPad, and 2 minutes you are in the car. And when you arrived, you just say goodbye and give a 5-star rating, and that's it. You already paid for the services, and payment as a financial service became seamless. It disappeared. And my idea that maybe regulatory reporting, financial reporting could be the same of experience, that it could disappear. Yeah, so in that changing environment, Bank of Lithuania prepares itself and very much adapting regulatory framework. We introduced newcomer program. We also very proactive in regulatory sandbox, and tonight we are speaking about RegTech SupTech. So why RegTech? Obviously, as was mentioned, post-crisis, accountability and regulatory standards are very much increasing. And on the other hand, Bank of Lithuania is very open and proactive in ensuring competition in Lithuanian financial market. So we think that technology to employ or harness technology to solve those issues push us forward to we are obliged to take necessary steps to help deal with compliance, because technology could reduce regulatory requirements and the burden or impediment for the market entrance. And I found, talking about compliance challenge, yes, so I found very illustrative visualization of how the pile of regulatory requirements started increasing after financial crisis. And one company already calculated that after financial crisis, 700,000 of new data points were introduced to report for the regulatory bodies. So it's impressive. And how does supervision stands in this context? The start of financial supervision is usually rule-based. It's usually legal acts which oblige or permits some activities of financial services. But this rule-based supervision was very much criticized after financial crisis, because you can't have every rule for every different situation. So principle-based supervision was introduced. But what does that mean in real world? That means that supervisor introduces the skeptical dialogue with the financial market participants, with the management bodies, with the shareholders, how to solve different situations, and do they see the perspective in the same way or differently. And that means that there are even more rules that are unwritten. Only skeptical dialogue solve issue which side is right, which is wrong, and that means that new data points are introduced to report for the regulatory bodies. And as I show you this example, how much of data now is reported to regulatory bodies, we understand that it's a huge burden not only for the financial market participants, for financial services providers, but also for regulators. And we are reaching the point where the shift of paradigm, shift of regulatory regime is quite near, because we are already near to the point where the granularity and frequency of reporting lets us to start the real-time supervision. And I would say that we are switching to insight-based supervision. That means that we could not only receive data from the financial market institutions, but also gain insights on that data, connecting all the dots from received documents, from received reports, and not keep the insights for ourselves as supervisory bodies, as regulatory bodies, but to share these insights, because our insights could be more broader, more wider, because usually financial institutions see their data, but they can't see the whole market. And the only regulatory or supervisory body sees the whole perspective of the financial market. And sharing the data would be beneficial not only for the particular institution, but also for the market conduct, for the soundness of and financial stability of the whole market. So what we say that we will equip ourselves with new technology to increase our efficiency and deliver the benefits to financial services, to consumers and society as a whole. But does that mean that before that we didn't use technology? Of course not. And there is a very good KPMG short report about that. Technology was always in place within financial services and regulatory. But RegTech, definition appeared only in 2015, 2016. And KPMG defined the generations of RegTech, regulatory technology. That means that we are already switching to the third generation of RegTech. And those RegTech solutions will be towarded not only to the particular regulation area, but to the data as data science. So why new technologies are not so suddenly introduced in the banking industry? We see that key drivers for adopting RegTech is obvious. It's quality of compliance, also reducing risks or operational risks, and reducing financial risk, cost saving regarding automating processes. When you save time, you could do more, better governance and better user experience. But we see that those RegTech solution providers and financial institutions do not meet each other, because integration awareness and complexity of banking industry for the RegTech solution providers are not quite opaque and not transparent. The cost and benefit test usually show that RegTech solution could not be passed. Knowledge of such young startups which provide RegTech solutions usually do not know banking industry or insurance industry very good, and trying scale too fast and fail to scale, etc., etc. So we see as a regulator that we could take some necessary steps to help banking industry, financial institutions, insurance companies to meet RegTech solution providers. And we see ourselves in those three directions. First of all, we want to implement RegTech solutions by ourselves, in our business activities, in our processes, in our premises, to be like a good example for the market, to be the leader in the market. The next one, we see that there are a lot of RegTech solutions for particular regulatory area. Name it Know Your Client or name your AML. There is a huge variety of different RegTech solutions. So nobody knows which one solves your problems. So we as a regulator discussing with the market, maybe we could prepare a list of some kind approved RegTech solutions and which could be safe to use and implement in their business cases. But still we have this idea in discussions because it's quite expensive to have such a list, to upkeep with the changing regulatory environments and continuously audit. Does it still valid? So still we're discussing with the market, but what we are, where we are quite active is the faster development of RegTech solutions in Lithuania. And what we are already doing, first of all, implementing in our activities some RegTech solutions. First of all, it was e-licensing tool. We provided for the market possibility to submit all necessary documents for granting license via electronic government gateway. And we prepared structures and guides how to improve submitted documents quality. And this tool is quite used of the major law firms, which submits usually it's electronic money or payment money institution license, and now we reached the #1 in Europe except UK. So the number of electronic money institutions and payment institutions in Lithuania are more than 100. And in the rest of the Europe is quite less. In Germany, Netherlands, they have a lower number of such type of companies compared to Lithuania. Dispute resolution tool. We also provided very good experience for consumers of financial services to solve the dispute regarding financial services. But to be more efficient, we introduced robotic process automation in that sphere, and some already documents responses for the financial institution or for the consumer are already prepared by robots, not by humans. And now we started new project. We call it data strategy, and we hope that this project will change the way we understand data and the way we manage data in Bank of Lithuania, and hope that this strategy will lead to the lower cost of financial market participants, because still we have some reports where the same data is reported, only in the different templates, different standards of reporting. So we are trying to find the best and most granular data to suit for the all mandates of Bank of Lithuania. So how does it look, the status quo of reporting? So usually every financial institution uses their own way how to prepare the same report. But the understanding of regulation, the interpretation of regulation, and the implementation in the code of the regulation is quite different, and there's sometimes it is even incomparable. So Bank of Lithuania gathers those data, aggregates, and shares usually more aggregated data for the market. Yes. What is our idea? Actually, if we could use some new technologies like API, where the most granular data could be submitted to the Bank of Lithuania from the financial institutions, then aggregation would be not to have upper granular data, but to connect all the dots and to share those insights with the financial industry. So we started new RegTech initiative and invited electronic money institution and payment money institution to participate in this event. And together with FinTech Hub LT Association, we partnered, find two IT providers where they joined forces to prepare such an IP add-in for the financial industry. And we believe that minimum viable product could be already tested in the beginning of 2020. And if we have a success story, we will scale up to the other financial market participants, other reports, etc. So I believe that now we are dealing only with electronic money institutions, but regarding the digital compliance and the experience that reporting disappears as as the payment for in the taxi area would help. And if you participate in this next year, I believe that we will call banking industry to participate in this exercise also. So that's the end of my presentation, and I'm open for the questions.